The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 5th June 2026. Well, precious metals plunge. What the market is really telling us. We can see right now there's about an hour left in the market as I'm doing a weekly perspective. Gold's off $150, 3.5%. Silver's down almost 8%, under 70. And both platinum and palladium are off 6% respectively. Gold is down roughly 3%. Silver's been hit down to 7-8% as I'm doing this update. Mining shares are taking a disproportionate beating, but that's because they're leveraged. So some are down 7, 8, 9, 10%. For new investors, days like this can feel alarming. For seasoned precious metals investors, it's really part of the territory. The immediate catalyst appears to be a much stronger than expected U.S. employment report. Non-farm payrolls came in at 172,000 jobs versus expected near 85,000. That purportedly changed the market narrative in a matter of minutes. Investors quickly concluded that the Federal Reserve is less likely to cut rates and may even be forced to tighten monetary policy for a bit longer. Treasury yields did jump and the U.S. dollar strengthened. The precious metals sold off. So did the stock market. And let's look at the bigger picture. The same economic data that's pressing gold down and silver down today is also causing stress elsewhere. Bond prices fell as yields rose and growth stocks sold off, as I said. The broader stock market weakened significantly. In other words, today's move is not a vote of confidence in the economy as much as it's a repricing of interest rate expectations. And this is where the contradiction becomes interesting. On one hand, we're told the economy is strong enough to support higher interest rates. On the other hand, government debt continues to expand, deficits remain enormous, and interest costs on that debt continue to rise. Remember, gold remains dramatically higher than it was a year ago. Silver remains far above levels never seen before this bull market. Of course, we know we've been 121 and down to 65, and now we're under 70. Central banks are still accumulating gold. Sovereign debt levels have not improved, and geopolitical tensions have increased. The mining shares, as I said, are leveraged to the metals, so gold falls 3%. You might see 9% in the mining stock. And ironically, many mining companies today are generating stronger cash flow than they ever have, and they're trading where their shares were priced when gold and silver were substantially lower. That disconnect remains one of the most fascinating features of this market cycle so far. So where does that leave us? I think investors need to distinguish between short-term volatility and the long-term trend. Short-term trend is clearly weakened. The market is adjusting to the possibility of higher interest rates. However, the long-term concerns, debt, deficits, currency debasement, geopolitical instability, and growing distrust in financial institutions, in fact, all institutions, remains firmly in place, and I would add it's still growing. If anything, today's highlights show just how sensitive markets have become to every piece of economic data that comes out. It's not a sign of strength. It's not a strong economy. It's a sign of how fragile things are. If the farm payroll number is much different than expected and the market uses that as an excuse to sell off, we'll see. Regardless, it has come down. That's a fact. Reasons, you can draw your own conclusions. The system is carrying more debt than ever before, and economic growth is more or less a myth. The governments continue to spend beyond their means, and these realities don't disappear because payrolls exceeded expectations for 1 month. For precious metals investors, days like today are never enjoyable, but they are often the price of admission during a secular bull market. Remember how many times I have said the function of a bull market is to shake off as many people as it possibly can all the way up. As I often remind subscribers, again, focus less on the daily quote and more on the reasons that you own the asset. And today, despite all the volatility, those reasons remain intact. Looking quickly at the Twitter here, a couple I reposted. This is nobody special. Jack I really like him. I met him at one of the conferences a few years ago. Just a straight shooter. Maybe it's the engineer in me. He's a mechanical engineer. I have a degree in aero engineering. Not that that matters, but just kind of the logic we're trained to think at during the course of study. Anyway, that's one talking about who's who in the zoo and who's giving you real news and real information and who's slanting it because they deal in the metals. Probably worth your time to watch that over the weekend if you can make the time. Nothing else I posted this week I would say is, I would call it mandatory. Any of it, obviously, you can, I'm a volunteerist, do what you want to do with your time. But just scrolling here slowly, really, central banks continue to buy, on and on, where we are with the stocks versus the commodities markets, where we are in the mining sector, still undervalued, that type of thing. Nothing really major other than that one video I just pointed out. So I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.